invasion of Ukraine, we are already seeing a financial impact around the world. U.S. stocks ended in positive territory today after more severe sanctions were announced. The Russian currency, meanwhile, took a major hit. At the same time, the price of oil jumped, which means we will all be paying more to fill up our cars. What do you need, though, to do to protect some of your investments? Senior Wealth Advisor Brad White joining us live today here on The Floor. First of all, Brad, glad you're on our show, especially considering the day that we've had.
Yeah, we've had a bit of news today, and as you might imagine, we are all in my profession. I don't want to say scrambling, but certainly just making sure we really read through as much as we can, try to help people out as far as what to do.
Well, let's start with that. What does the average investor do? People who have an IRA or 401k, they're wondering what could potentially happen to the stock market. Should they just hold tight? What do you suggest?
In a word, the best thing to do is nothing. Okay. And I've talked about this a lot to all my clients throughout my career, which is I know people want me to tell them something they want to hear so badly in moments like this, because this is a very scary human thing that's going on globally, right? This is potentially war, right? There's not much scarier than that. So there's a visceral reaction and this knee-jerk reaction that says, oh my gosh, think of how bad things are going to get. Shouldn't I just sell out, or shouldn't I get out of investments right now? And the short answer to that is that's typically the worst thing you should do. One of the things I try to make very clear is that there's a huge difference between being a professional trader and the average investor, okay? 99% of you should just be average investors over the long term, which means you should be in a diversified global portfolio of a variety of different stocks from different areas, different sectors, different countries, a variety of bonds and cash and real estate. It should be tailored to your long-term goals. I'm talking 5, 10, 20-year timeframes. It should be tailored to your risk tolerances. So as that's what you already have, I will tell you this, that there has never been a geopolitical event that has caused you to need to make a short-term move that's been in your benefit.
Okay.
And again, I know that's really hard to kind of digest right now. I took a look and pulled up some numbers today just to try to help with this. And speaking of visceral, what about 9/11, right? So September 11th attacks, the S&P 500 dropped 12% over 11 days. I mean, how scary was that? It took 30 days for the market to recover entirely.
Okay.
So had you held pat, again, within a month of the worst war we've had right on our soil since Pearl Harbor, markets recovered. Look at Russia and Crimea, right, in 2014. Look up a month after those attacks, the market was actually up 2% total. The Paris attacks in 2015. Market a month later, around even. Iraq war in 2003, a month later, up 2%.
If we're looking
the U.S.
at
North
history,
Korea tensions in July of
Brad.
2017. After a month, markets down around 1%, so around even. So as bad as this is from a human standpoint,
right,
from a strictly market standpoint, and let's be clear, that's what we're talking about, unless you are a professional trader, that's your job to try to make moves on a daily basis, really try to bifurcate your emotions on what's going on over here and not disrupt your long-term investments and try to market time.
Okay, Brad, we're going to run out of time here, and I have a couple more questions to get to, so if you can keep your answers slightly more concise, that'd be hugely helpful. Let's talk about oil. We know that the price of oil, the barrels have jumped even overnight. What do you suggest people do as far as trying to keep a budget intact by paying, at the same time, paying a lot more for gas?
Yeah, I'd be lying if I said I had the crystal ball of what's going to happen here in the short term. Russia does produce 12% of the oil in the world and 17% of the world's natural gas supply. So if we and the European Union levy a bunch of sanctions on Russia and they feel like retaliating as sanctions back to us when it comes to energy and oil, that's a disruption in supply. That causes oil prices to go up. But it's not that simple. First and foremost, all of this has to actually play out. And if we levy all these sanctions on Russia, again, they may not take this all the way. You never know what OPEC will do or Iran in other cases. So if we see a short-term bump in gas, I'd love to have an answer for the average person there. You're probably just paying a little bit more, but it's not typically something that's going to last for years and years or anything like that.
Okay. And then really quick, how do sanctions tend to impact the global market? Have we ever seen anything to this magnitude before? And I realize I'm giving you about 15 seconds to answer that.
You know, as far as how this impacts, again, for the average person in there, it's really not going to impact you. We should see things in sanctions that will greatly impact the financial markets in Russia and Ukraine. So if you're in Russia right now and you're trying to do business and you're trying to raise capital, that's going to greatly affect you. For us here right now, this probably won't have a short-term impact on just your average economic or average person, so to speak.
All right, Brad White, we always appreciate your expertise. If folks want to have you answer some more of their questions, how can they find you?
You can always go to our website, epsteinandwhite.com.
All right, Brad, thank you.